All right, everybody, we're here at Spring Garden here in High Point, and I got Eddie Leiss here with me with Blue Ridge Bank, and he's going to tell you guys a little bit about himself as well about some of the loan programs out there to where if you're looking to buy a home, you can contact Eddie here and he can get you started with that process. So, Eddie, again, introduce yourself and kind of tell a little bit of background about where you come from, about your company, and we'll kind of hop into it from there.
Okay, well, my name is Eddie Leiss, and I'm with Blue Ridge Bank. We've got an office here in Greensboro, and we've got an office in Kernersville. We actually have several offices in North Carolina. I personally work out of the one in Kernersville. Our bank's been in business since 1893, so
wow.
So we've got a little bit of history.
Yes.
We actually bought what was used to be called River Community Bank, for some of you that might be familiar with that bank. Blue Ridge acquired them not too long ago. I've been helping people in the mortgage business since 2005. Got out of the business a little bit like a lot of people around 2008 because of the real estate crash, but I'm back into the business now, and it's going well.
Good, good, awesome. Well, Eddie, for those of you who don't know him, many of the realtors around town consider Eddie one of the top mortgage bankers in the area. So, any questions you need, he's always available to kind of help you and get a quick answer as quickly as possible. So, all right, Eddie, we're just going to hop into it.
Okay.
Again, so for those that's looking to get pre-approved, kind of explain the process for them. Kind of where do they start, how they go about the whole situation of getting pre-approved for a mortgage to purchase a house.
Well, the process is actually very simple. It's not as complicated as a lot of people may perceive it to be.
Okay.
So, the first step obviously is to reach out to a mortgage lender or banker, and they're going to ask you for some basic information. Your name, your date of birth, your social, your address, that kind of thing. And the reason that it's such a good idea is because the last thing that you want to do is go out there and start looking for homes that doesn't maybe fit your budget. You might think, oh, I'm the person that's looking at $200,000 homes, and you're not, at that level, or maybe you're beyond that level. You know what I mean? Also, whenever you go to make an offer, if just put yourselves in the shoes of a seller, right? So if you're selling your house and you have an offer that comes in with a pre-approval letter, that looks a lot stronger because they've seen that you've already met with somebody. They know your income, they know your credit, so you're already pre-qualified to buy that house. So that offer looks a lot stronger than another offer that will come in without any kind of a pre-approval letter. So
exactly, and we see that a lot. It kind of sets your standard as I'm a serious buyer, that I'm really looking to buy your house.
Exactly.
So I've kind of done all my prerequisites to get pre-approved, and now I'm ready to buy.
Absolutely.
So that's awesome. What's kind of the timeline for that? So you call yourself, you get the proof. How long does it take to get pre-approved?
Very fast. So usually the conversation is about 15 minutes, just depending on how many questions you might have.
Okay.
And then what I'll do is a credit analysis, pull your credit, take a look at what your credit is. Obviously, I'm going to need to know what kind of income you make, and then in that credit analysis, part of what I do is look at how much debt you have, because you have to have a certain debt-to-income ratio to be able to qualify, to buy a house.
Correct.
And obviously, you don't want to overextend yourself and become house poor. You want to enjoy your life as well.
Yes.
So yeah, then that way I can tell you, okay, well, this is kind of the price point of what would make sense for you.
Correct.
And we'd have that dialogue, but usually within about 15-20 minutes.
Okay.
And then I'll just send out a pre-approval letter to the client and to the realtor. Okay. And you guys can start house shopping.
Awesome. Yeah. All right, sounds good. So what kind of program? So we hear it a lot in my field of work, but people's always wondering, what's the different programs? You have first-time home buyer programs and things like that. What's some of the different programs that you can offer that it's not just one standard mortgage?
Yeah, good question. So there are a lot of different programs that are available. I mean, in terms of the types of mortgages, of course, you have FHA mortgage, you have VA, you have conventional, you've got construction loans. The awesome thing that we're able to provide those down payment assistance through North Carolina Housing. They've got a 3% down. They got a 5% down payment assistance, and also $15,000, just a flat $15,000.
Yes.
And a lot of people aren't aware of that. So, and there are certain qualifications to be able to qualify for that program. It's based on ultimately two things: your credit score and also how much income is made in the house.
Okay.
So that's really important, not just the individual borrower. So if there's only one person, if you're married, it's going to count incomes for both the husband and the wife, even though only one person may be on the loan. It's a household income.
Okay. Yep. And that gets asked a lot because people think they can, maybe a stay-at-home mom or something like that. that can kind of, you don't have to worry about that. But some people,
Right.
if the only one of them's in a mortgage, I think my situation, I think I'm actually the only one on our loan. But in that case, for that situation, we would still have to count my wife's income.
Correct. Yeah,
Correct.
if she's
Okay.
working, yes.
Okay.
Absolutely.
And you spoke a little bit about the $15,000 program. Can you go in a little bit more in depth? Because I'm sure many other people watching have heard this program a lot and kind of curious if it's actually true or not, if there's some kind of fine line or something hidden behind the scenes that they really can get $15,000 to purchase a home and no money down or anything.
Absolutely, yeah. That's honest to God truth. That
Okay.
is, you know, it's a gift from the state.
Yes.
So there's only certain counties, you know, that actually offer that. It's provided by North Carolina Housing,
Okay.
and it's basically subordinate financing of $15,000. It's recorded as a second lien.
Okay.
Right. So you have to stay in the house for a certain period of time. Otherwise, you know, that amount will have to be, you know, paid back.
Correct.
You know, so it's not like you can just, you know, buy a house, use that $15,000 and get a refinance and then, you know, cash out
Cash
15
out,
grand.
yes.
Can't do that.
Yes.
So the whole purpose is to help you get into the house, you know, without you having to come out of pocket. So it can be applied towards your down payment and closing costs, one or the other, or a combination of both. So, you know, can you buy a house with the down payment assistance and literally come out of pocket no money? Yes.
Awesome. Wow, I wish I was around when I purchased my first home.
I know.
That'd have been awesome.
I know. A lot of people don't know that.
Yes.
They think, you know, oh my gosh, you know, I need to have $5,000, $10,000 in the bank,
Yes.
or, you know, I'm just automatically disqualified, and that's just not the case.
And we see many people, you know, they have that mindset that they don't have enough money in savings yet to buy a house, and they're renting and they're paying $100, $200 more in rent than they could for buying a house, but they don't know about those programs. So that's good advice to kind of know that there's many programs out there that can help you get out of renting and go purchase your first home and kind of help build that equity in your house a lot faster than normal.
Yep. And Brian, I want to mention one more thing too.
Okay.
Is just kind of share a story of actual mutual client, you know, who's we won't talk, you know, say his name,
Yeah.
but a dishwasher, you know, just making, you know, $11 an hour,
Yes,
you know,
absolutely.
who qualifies to
Yes.
buy a house, you know,
Yes.
and you know, of course, you know, the perception is, oh well, you know, I need to make 50, 60 grand, you know, but that's just not the case either.
Nope,
you know?
absolutely.
And I'm not suggesting that, you know, well, if you just make $11 an hour that you 100% can buy a house.
Yes.
You know, it depends on the debt load that you have.
Yeah.
But it's definitely possible.
Absolutely,
Yeah.
yes, and that's a good reference right there. 'Cause that's absolutely true.
It's just
But
so, you know, awesome, you know, to see, you know, someone that, you know, makes $11 an hour can still be a homeowner.
the American dream is still alive.
Yes,
So.
absolutely.
So as far as like closing costs, I know you mentioned that in the past about how the $15,000 could pay for that. When people hear about closing costs, and I get asked all the time, so what are closing costs? What does that involve?
Yeah.
Can you kind of explain that a little bit as far as what's part of the closing costs?
Sure. So most lenders and brokers, they're going to have some set of closing costs that are from them. So like a 1% origination fee, so which is 1% of the loan amount. And then they'll have, and different companies will break it down in different ways in terms of like a commitment fee, or they might say an application fee or a funding fee. And so they may break them down into different types of categories,
Okay.
but ultimately you have to add them up. You know, our company, we just group everything together as a
Okay.
commitment fee, you know.
Okay.
So we just have a 1% origination fee, and then we have a commitment fee, and
Okay.
that's the only fees that we charge as a lender.
Correct.
Outside of, you know, your credit report, you know, a flood cert if that's necessary, you know, things of that nature. Then of course you've got the cost of an appraisal. You know,
Correct.
that's required on all loans. You know, you
Yes.
have to have an appraisal. You know, some companies require that you pay for the appraisal out of pocket. Some you can actually, like ourselves, you can include it into the loan as part of the closing costs.
Wow,
you know?
okay.
Right. And a lot of times people, what they'll do is when you make an offer, and as part of the pre-approval process as well, we have a conversation about, you know, how much money do you have, you know, to put into the transaction. And if you don't, then we know, hey, we need to go back to the realtor, you know, your agent, and say,
Right.
hey, you know, we need to ask for some seller concessions. You
Okay.
know, and these are the total closing costs that we need to ask for. That way you know what your offer is supposed to look like.
Okay.
Yeah.
So you guys are able to kind of predetermine that before we even begin that process.
Before you even start looking for a house. Yep,
Awesome.
we can,
So that
you know,
helps.
in terms of, you know, we have a ballpark idea of what kind of purchase price it
Yeah.
is, and we can
Yeah.
determine, you know, what loan program,
Yeah.
which will dictate, you know, the overall closing costs.
What the payment and things
Correct.
like that
Yep.
would be. Awesome.
Yep. And then you can go in there, make an offer in the price point that you qualify for, and ask for seller concessions
Okay.
Based on your needs.
Okay.
Yep.
All right. And I guess last thought for, you know, we've been mentioning a lot for that person that's renting or somebody looking to purchase their first home. What kind of advice do you have for them? You know?
Yeah. Well, I would say just don't assume that you need to, you know, stay as a renter. You know, If you've not ever taken the time to, one, even look at your credit, and by the way, for those of you that are watching here, Credit Karma is not necessarily the most accurate source for your credit. There's different levels of credit. People that pull your credit for car loans is different standards than people who pull you credit for a mortgage, and then those for credit cards. So your scores can really vary a lot, and Credit Karma is frankly not a great source. So you need to talk to a mortgage lender, a banker, like myself, who can actually pull the credit, use that specific credit report to determine whether or not you qualify. And just go through the process. It's not going to cost you anything to find out. If you can, live that American dream and be a homeowner.
Exactly.
So,
exactly. And they say now,
I
think the national report came out about a month ago and said that renting is now more costly than buying a home.
Absolutely.
First payment. So I mean, that's like I said, guys. If you can get to a home with no money down and save money, why not at least give Eddie or somebody like that a call in 10 or 15 minutes to kind of run your information and kind of see if we can get you in the home that you never thought you'd be able to buy. So, Eddie, I want to thank you for joining me today. Again, we're at Spring Garden over here in High Point. For those of you who have not checked this place out, it's one of the best coffee shops around. So, any of you have any questions, I will be putting our information in the comments below. So, feel free to reach out to either Eddie or myself, and we will be glad to help you guys hopefully get the process started of buying a home.
Thanks for watching.
Thank you.
Look
Thank you, guys.